Councilmember Nicole Kober. Remarks by Dara Duguay, the CEO for the Credit Builders Alliance. And Stacy Porfala, Vice President of Social Impact at Visa. At the end of the conversation, we will open it up to you all for audience questions. If you have any questions, please submit them to NWBC's Communication Manager, Tamarin Rogi. You can email them to info@nwbc.gov or text 714-875-4976. That's 714-754-976. So with that, I'd like to introduce NWBC Council Member Nicole Kober. Nicole is Principal Managing Partner of Kober Johnson and Romney, a legal and business consulting firm. She serves on the Council's Communication and Access to Capital subcommittees and is passionate about financial education. Nicole, thank you so much for joining and for being today's host.
Thank you, Nina. And thanks to you and the NWBC staff for supporting the important work of the Council and for facilitating this amazing new webinar series. I would ask everyone to mute. We're getting a little feedback, so if you're not speaking, just make sure you mute your phone, all right? Thanks so much. And good afternoon, everyone. Thank you all so much for joining us for our second webinar in our Connecting Voices and Impacting Policy series. Now, as Nina has mentioned, the NWBC is a federal advisory committee, and we serve as a source of advice and policy recommendations for the President, Congress, and the United States Small Business Administration. We fulfill this part of our mission by monitoring, reviewing, and analyzing policy recommendations and programs that impact women business owners' ability to establish and obtain capital. However, we also fulfill our mission by developing and promoting new initiatives, signature programs, and strategies designed to advance and foster women's business enterprises. Now, platforms like our new webinar series are just so important because they help connect women entrepreneurs and business owners to key stakeholders, resources, and to some of the critical information that already exists out there, and so that we can help individuals build your financial management skills, hone your entrepreneurial acumen, and increase the chances of accessing diversified sources of capital. All right, and just again, as a reminder, if you have any questions throughout the rest of the webinar, please submit your questions and comments to our communications manager. And that email address, please write it down, is info@nwbc.gov, or you can text at 714-875-4976. Again, that's 714-875-4976. Now, this webinar will be recorded and available on our website. And if you're joining us by phone and would like to access the slides, please visit nwbc.gov/NWBC-webinar-series. All right. And as a point of privilege, before I continue with our introductions and open the discussion, I would just like to say for a moment how very important and deeply personal that I consider the task of empowering women as entrepreneurs and business owners, and trying to make sure that we get financial acumen and skills to you all and help you access critical funding that you need to start and grow your enterprises to succeed. And I have been a business owner for almost 20 years now. I've had 2 businesses, and as a result of these being boots on the ground, I really do take these things seriously, and I'm so grateful for the opportunity with the council to have these critical discussions and information sharing opportunities with you all. All right. As I previously alluded to, today we will hear from 2 leaders and experts in the field of financial education credit building, and credit repair. Very, very important topics. We'll have an opportunity to learn about the multi-sector resources and tools that can help position entrepreneurs better manage their finances and increase prospects of accessing credit. And just as important, we want to help avoid potential pitfalls that can imperil their enterprise and even their own personal assets. All right, just consider the following. Number one, lack of savings. Research has found that many households of all income levels are not saving enough. In recent national survey, we found that 80% of American consumers believe they lack enough savings, and a full 1/3 have no savings whatsoever. Moreover, 40% of Americans do not have $400 in available savings to pay for unplanned emergency expenses without borrowing or selling a possession. Secondly, credit and consumer debt. Upwards of 77% of American families hold debt of some type, with the national total consumer debt totaling more than 13 million. Additionally, credit cards are the primary form of consumer borrowing in the United States. And at the end of 2017, nearly 83% of American adults, that's 181 million consumers, had at least one credit card. Now, credit scores, another important factor. Also, despite increased accessibility in the marketplace, only 36% of American consumers obtained their credit report at all in 2018, and the percentage of consumers who said it was important to check these reports has declined in recent years. This point of discussion provides a segue to our first presenter, Ms. Dara Dugai, the CEO for Credit Builders Alliance. All right. And Dara will be followed by Stacy Porfala, and she is the VP of Social Impact at Visa for our second part of our webinar. All right. Dara is a former director of Citi's Office of Financial Education and has been involved with the issue of financial capability and empowerment for over 25 years. And prior to joining the Credit Builders Alliance, she ran her own consulting practice and advised clients such as TD Bank, the World Bank Group, Experian, Visa, SunTrust Bank for their financial educational efforts. Dara also served as the first executive director of the nonprofit Jumpstart Coalition for Personal Financial Literacy. She's considered a national expert on personal finance. She's also the author of 3 critically acclaimed personal finance books, the Citi Common Sense Money Guide for Real People, Please Send Money, a financial survival guide for young adults on their own. I got to get my 22-year-old son that book. Thanks, Dara. And Don't Spend Your Raise, and 59 other money rules you can't afford to break. Now, remember, as a reminder, if you have any questions during the rest of the webinar, please submit your questions or comments to our communications manager at info@nwbc.gov or text at 714-875-4976. Welcome, Dara.
Thank you so much. Could we move to the slide that says our mission and our philosophy? Unfortunately, I'm having some technical problems, so I can't see the deck. So if someone could confirm that we're there, that would be awesome.
We're good, Dara.
We are there.
Okay, fabulous. So thank you so much for the invitation to speak today. As was just noted, I am the CEO of Credit Builders Alliance. We are a national alliance of nonprofits We have about 550 members located in almost every state in the United States. And the commonality among all of them is that they really believe, as we do, that good credit is an asset, that in today's society you really, really have to have good credit for so many things. If you can go to the next slide, I'll show you what I mean. It used to be that you just needed a good credit history and a corresponding good credit score in order to access financial products. So you were either approved for a credit card or declined for a credit card, or you were either given a very good, 2% interest rate on your auto loan or a 36% interest rate, all depending on your credit report. But since then, really credit and credit scores have moved to really impact so many other areas of our lives. The second bullet talks about rental housing. That's just an example. Many tenants use a tenant screening before they decide whether to rent to you or not. And in many cases, that's an impediment to actually moving into a particular, a complex that you might want to if your credit report is not good enough to pass that tenant screening. We also know that for utilities, for many cell phone plans, that if your credit history is not good, they may require you to put a deposit up before you can even open the account. And we've also heard that in cases of credit fraud, in many cases, people that have harmed their own credit may commit, ID theft and actually start to build a credit profile of maybe their child by using their Social Security number in order to get access to, utilities, cell phone plans if their own credit has been very damaged. And when we talk about the next bullet, which is insurance products, a study was done that really showed something quite interesting. They showed that in relationship to car insurance, that people that had a bad driving record but that had good credit, they actually paid less than people that had a good driving record but a bad credit score. So, if you think about, what insurance, and specifically car insurance, should be based on, it really should be based on, your ability to drive the car and sort of your track record in driving the car. But this study really showed that the more important variable was what your credit score was versus your driving record. And then I also wanted to point out the last bullet on the slide, which talks about employment. Although the credit score is not allowed to be used in the hiring process, your credit report is. And in many cases, including an estimated 50% of employers, your credit report is used in the hiring process. And this is not just for jobs that require a security clearance or jobs in financial services. We're hearing from our network that it's all kinds of jobs. Part-time job at the gym, working for the zoo, all kinds of jobs are including this in their hiring process. So we can see that credit building is really important in a holistic way in so many different areas. So if we can go to the next slide. So specifically talking about credit in your business, because that is the focus of our chat today, is really business, small business, and their access to credit and financing. We really see that credit is integral, right? It's integral to access financing. You need it to acquire inventory. You need it to purchase necessary equipment and materials. You also, of course, need it to manage your working capital. So for all of these reasons, access to credit is really, really, really critical. So if we can take a look at the next slide. Talking about your personal credit and how it is related to your own business. For people that are just starting out, they're just establishing a new business, so sort of the beginning of this arrow that you see there. If you don't even have a business that exists yet and you might just have a business plan, any decisions for whether to grant you a loan are going to be made based on your personal credit history, and you are going to be the one that is personally responsible for that line of credit or that loan. So it's really important to have your own personal credit history really in good shape because it is going to affect your small business's ability to be able to access financing. So at the very beginning, before you even have a business, of course, your personal credit. If you're starting out and your business is running, in many cases, your personal credit is also still vitally important. It usually is only when the business becomes big enough that you start then developing a parallel commercial or business credit file. And many of us know business credit when we hear the word Dun & Bradstreet. So that's one of the major credit bureaus that can start to develop a business credit file for you. And so there's sort of a transition from just using your personal credit to then establishing a commercial or business credit file that will allow you then to have access to even bigger loans to grow your business. So if you can take a look at the next slide. Just to go over some of the credit basics so that the terminology is understood. Your credit history is really just a file cabinet. So we have the picture here of a file cabinet. Just think of it as a way to store your habits and in terms of your payment habits. Anything that's positive will stay on your credit report for 10 years usually, and most negatives stay on for 7 years. The major exception to that is a Chapter 7 bankruptcy, which will stay on your credit report up to 10 years. And so it stays on for quite a while. The longer it's on your report, the farther away it is from the actual time when the incident took place, the less sort of weight it'll have. So it's going to harm you more if it was very recent versus if it's about ready to fall off, 6.5 years later. So that's your credit history in your file. Your report, I want you to think of it this way. When you pull your credit report, when you either do it personally, I highly recommend everyone to do it. You have access to all three of the major credit bureaus, which are Experian, Equifax, and TransUnion. You can view your report once a year for free. You might want to space it out and not look at all reports at one time. So you can go to annualcreditreport.com. And then you might want to, now go in and take a look at your Experian report, and maybe in 4 months look at your Equifax report, and then in 4 more months look at your TransUnion report. This way you can space it out. A lot of the information is the same. There might be some differences with the smaller creditors. But keep in mind when you look at your credit report or when a lender pulls it for underwriting, it is just a moment in time. So it's what your situation is at that particular moment that they pull it. The one sort of caveat that I'd like to say is some of the new credit score models, like the newer version of FICO that's going to be rolled out toward the end of this year, and the newer versions of Vantage Score, which is a competitor to FICO, they already include something called trended data. So it's not just a moment in time. They're actually looking at patterns. So for instance, if you have a credit card and you charge it up to the maximum allowed, and then you get your limit increased, and then you also charge that up to the maximum allowed. So you continue to charge your card up to the maximum allowed without ever paying it down. That's a trend, and that's probably going to show up negatively. And so they're getting to the point that a lot of the newer credit score models are including this new look, which is a trended data look. And then finally, the last term is credit score. We've all heard of that. There is not just one credit score. There are so many credit scores. Even within FICO, which is the biggest leader in the industry, there is a multitude of credit scores. There's different credit scores that auto lenders have that have different variables versus mortgage lenders. And so, there is not just one score. However, they've tried to standardize a lot of these scores. Vantage Score now is on the same range as FICO, and so it's normally between a range of like 350 up to 800. And so the higher the score is, usually the better your credit score is also. So if you can move on to the next slide. So this gives you an idea of, sort of the range, as I said, about 300 to 850. The higher up you get, you're eligible for more reasonable rates. You might not need a cosigner anymore. You're viewed as a lower risk. There are many different categories. You might not know of one that's called near prime. I think we've heard of subprime, which is equated with having poor credit. But there is, before you get to prime or super prime, a category called near prime. And many times the creditors, depending on what category you fall in, they have corresponding different interest rates that they'll offer you. On the very left of this slide is a category that's called unscored. We in the industry call that credit invisible. And there's many Americans that are credit invisible. Estimates are anywhere between 45 million to about 65 million Americans that have no credit history whatsoever. And so that's very, very difficult to have access to, financing, housing, employment, all of these things, because you have no history. And so if you have no history, it's very high risk in most cases because they don't have any pattern to look at in which to ascertain, what your behavior is going to be. So that gives you just a rough range of what score you might be in. If you can take a look at the next slide, there's many different variables that go into what makes up your score. I must say that FICO and also its competitor Vantage score, this sort of breakdown is pretty similar. And both of them absolutely have as the biggest factor your payment history. And what that means is it's super, super, super important to pay your bills on time. If you tend to procrastinate, try to put some mechanisms in place so that you won't forget your bills. Because if you have, on average, if you have a 30-day late payment, which means that you didn't pay like January's bill and then February's bill comes and you still hadn't paid January's bill, that's a 30-day late payment. That's just not paying late like a couple days, but it's when you receive the next month's bill. Then that would show up on your credit report as being 30 days late. And on average, your credit score can drop by about 100 points. So it's really critical. That's the single most important thing that you can do to improve your credit score is to pay on time. There's other variables. There's some things that you have no control over. One of them on the right, 15% of your credit score is determined by the length of your credit history. So the longer you've had your credit cards, the older you are, and the longer you've been in the financial marketplace, it's going to usually benefit you. It's going to usually harm people that are younger or have just immigrated to this country. So it's really a mix, and I just wanted to give you a sense of the different variables. So if you can take a look at the next slide. These are Credit Builders Alliance's best practices in order to have a strong credit score. And the first one is keep it active, which means that you need to actually be using your credit. So if you have a credit card and it's just sitting in your wallet and you haven't used it for, 6 months or a year, you actually, it's not considered active. In order to generate a credit score, you actually have to have credit that's being used actively. So it's sort of a hard thing to conceptualize, but many of our members that do financial counseling and coaching to their clients, many of them, when they pull their credit report, it might be a very thick credit report, but they find out that they are unable to this client is unable to generate a credit score. So you wonder, how can that be? How can they have maybe a 20-page credit report and unable to generate a credit score? It's because everything on their credit report is stale. None of it is active. So they might have late payments, judgments, liens, things like bankruptcies. These are all negatives and they're not active. So really important to actually use your credit. It's also important, the second tip is to keep it low, which means try not to charge your balances up to the max. Try to, if you can, pay off your credit card in full when you get it every month, and you don't have to worry about paying interest. So as a general rule of thumb, the lower your debt balances are in relationship to the credit that it's available, it's better. And then finally, keep it up. And what this means is you can be credit invisible. And after usually 6 months of activity, so let's say you get a line of credit, a credit card, or a loan, and you start paying it on time, usually after 6 months you can generate a credit score. So it's usually not that difficult. We find on average that our members working with people that start out credit invisible, if they pay on time after 6 months, on average they can get their credit score around 650, which is just starting to get them into the prime neighborhood. So it's not that difficult to do as long as you pay on time. The next slide, if you can turn to. So how do you build credit? This is a simple formula. Again, pay on time. It's really important that whatever source of credit you have it must be reported to the credit bureau. If you're not sure, ask them. You might, for instance, have a loan you're paying off from a local furniture store on a couch. And many of these smaller establishments don't report to the credit bureaus. So you're not getting credit for your payments. So it's really important that that source of credit is being reported to a credit bureau. And as long as you make on-time payments, it's reported to a credit bureau every month, that's a way that you can build credit. So take a look at the next slide. These are some strategies for building personal credit if you're starting at the beginning or if you've harmed your credit and you're trying to rebuild it. One of the great options is secured credit cards. Many of the credit card companies offer secured credit cards. This basically means you just need to put a security deposit down, a certain amount of money, and then you'll have access only up to that amount of money, but it's reported to the credit bureaus. It's a great way to build credit. There's also something called credit builder loans. Many of CBAs, Credit Builders Alliances, lender members offer these loans. This is where you get the money at the end. So you make monthly payments according to what you have agreed to. So if it's $50 a month, it's reported to the credit bureaus. At the end of a time period, usually 6 months or a year, they open up the safe, the vault, whatever you want to call it, and you get access to your money. So you get the money at the end and not at the beginning. There's also rent reporting. There's a lot of new financial technology, or we call it fintech companies, that allow you to connect your rent reporting. That's reported to the credit bureaus. One of the companies that we work with at CBA is called Isuzu, ESUSU. That's just an example of a company that will let you opt in and have your rent reported to the credit bureaus. On the bottom, you can also become an authorized user on someone else's, for instance, credit card. The next circle talks about social loans. These are lending circles. A lot of people in immigrant communities get together on a monthly basis. They put money they contribute to a pot, and then essentially I don't know how they figure out who goes first, but you draw straws or whatever the methodology is, and then each month one person gets that whole pot of money. But the organizations that are doing social loans or lending circles, the ones that report these payments to the credit bureaus, then will help you build credit. And then also a lot of our members, which are nonprofit lenders, have personal loans for specific purposes, whether it's to help pay for immigration costs or to avoid eviction, or there's a lot of personal reasons that our members are providing loans. So I wanted to finish by letting you know where can you look. Many of you may think only of going to traditional financial services companies to get access to capital or access to loans. So you might think of just the big banks or big financial companies. You may have gone, you may have been denied, especially if you don't have a track record of a business or it's just a business plan. So where can you go? Who's going to help you? The good news is that there's lots of places that you can go to that can hopefully offer you financing and not give you a turn down. And I wanted to point out on the top this terminology CDFI. It stands for Community Development Financial Institution, and most of the members of CBA that are lenders have this designation, and they're approved by the Treasury Department, and they are supposed to lend in distressed neighborhoods, and they most commonly lend to people who have no credit history, bad credit history, just starting out in small business, and so these CDFIs are a great, great, great place to start. So if we can turn to the next slide. I believe that these decks are going to be shared with you. I do give the SBA permission to share my deck, so you don't have to, write down this URL. But if you'd like to, this is a great way to have to know how to be connected to many of the members of Credit Builders Alliance. you just go to this link here. Our members not only provide loans, but they also provide financial coaching and counseling and a whole variety of services. We have just a static Excel spreadsheet right now, but within the next couple of months, it's going to be very much alive and searchable and listing, all the services. But at least for the moment, you can find out who's in your community. If you can take a look at the next slide. The next slide talks about how you can find all of the CDFIs. This is an association for CDFIs, just lenders. My organization, as I said, also has organizations that do financial coaching and counseling, but this is a website just to find lenders for CDFIs, and it's a great locator there. If you can take a look at the next slide, I also have a place for you to find a locator for credit unions. They usually have more leniency and are usually more willing to lend to people. They have less stringent standards than many banks, so this is how to find a credit union in your community. And then if you can look at the next slide, I wanted to stop my presentation with a success story. And this is one of our members that's in New York City. It's called Business Center for New Americans, and they serve a lot of new immigrants. And a couple of years ago, they served a woman. Her name is S2, and she's a refugee from Western Africa, a single mother. And if you can take a look at the next slide, I want to show you her progression. So when they first started counseling her in March of 2007, she was credit invisible, no score. She started out with one of these credit builder loans I told you about where you get the money at the end. And so she got a $500 loan. She paid it on time. At the end of paying off that loan and getting access to the money, she was able to move her credit score again. We find this over and over and over to a score in the mid-600s, about 650. Then after that, she was able to access from BCNA a $2,000 small business loan. She paid that on time. That got her score to the high 700s. And then she was able to also have a match grant along with a special savings program that they also had. And she was able to launch a successful small business. And then in 2015, she was actually able to get a mortgage. So you look at the progression and, let's see, 8 years, she was able to go from credit invisible to having a successful small business and have home ownership. So I wanted to end there. That story is not unique. Our members serve people all the time that are success stories. So thank you very much for the opportunity to be able to speak with everyone, and I will be around at the very end to answer questions.
Thank you so much, Dara. That was hugely valuable information. We're so appreciative and energized by all of the connections and all the information that we're able to share with our stakeholders and impart on women business owners, including those we meet and touch in our outreach efforts across the country, and specifically through our hashtag Let's Talk Business Roundtable series, our first of which this year takes place on February 27th in San Juan, Puerto Rico. Now I have the privilege of introducing Stacy Pofalla, the Vice President of Social Impact for Visa Inc. Now, Stacy joined Visa in 2000 as a member of their product development team, leading several new product initiatives, including healthcare and employee benefit products, as well as corporate, government, and payroll prepaid products. Her passion for new ideas has led her to be an inventor of more than 20 patents. She's joined Visa's Global Financial Inclusion team in 2015 to work on solutions and approaches for governments, underserved consumers, and small businesses. In 2017, Visa created the Social Impact team, and Stacy now leads a team developing global programs focused on helping small businesses, especially those led by women, to get access to the kinds of skills, business networks, and financial services to help them grow and thrive. Stacy, thank you so much for joining us.
Thank you. It's my pleasure. Please let me know if you can't hear me or so on and so forth. I'm using my mobile phone, so just want to make sure everything is clear. It's such a pleasure to be here. Thank you so much. And I know we are running a bit late, so I won't zip through these slides, but I will go fairly quickly so we can try and have some room for questions. So on the first slide, I'll just talk briefly about Visa's social impact, vision, and mission. You might wonder why social impact is talking about women and women small business owners. And I think if you look at the slides, you can see how being a force for good and really focusing on enabling sustainable and inclusive growth is important to Visa. And that's not only important from our business perspective, but also from our social impact mission and vision, where we really see that a combination of our Visa Foundation, we'll talk momentarily about our foundation, and our Visa Inc. resources we can bring to bear to really help enable inclusive economic growth. We can lead responsibly on environmental, social, and governance issues. And as an employer with many employees in the United States and around the world, we really focus on our employee engagement. And we really focus, I'd like to flip the slide, please. So we focus on women small business owners, small businesses generally, but really on women's economic empowerment for a number of reasons. One, small businesses just are the backbone of the economy around the world. There's more than 500 million small businesses. In emerging markets, 98% of them of all businesses are small businesses, and it represents a huge portion of GDP globally and in emerging markets. But there's challenges that small business owners face. I think Dara did a great job about talking about credit, how to manage your credit score, how to access credit, and really be thoughtful about the impact there. And I would say credit is one of the pervasive issues or questions that comes up in research and in conversations with small businesses. But a couple of the other issues that small business owners face is really a gap in terms of access to the kinds of skills small business owners feel that they need to really be successful, to run their businesses efficiently, and to kind of fulfill their aspirations. And another gap is really about the kinds of networks, the peer networks, the mentorship, just access to those kinds of connections also that can help them feel that they can truly be successful. So, and that's all businesses, and then put the gender lens on that, right? And what we know around the world is, there is a disparity. There's a gender gap, and if we could close that gender gap, we could contribute an additional 12 to 20 plus trillion dollars to global GDP. So we think there's so much power in focusing on women small business owners, and not only the business owners themselves, but as women, we know that we can transform communities, and we can do that through the way that we spend our own funds. When we look at survey data, 82% of women say they are more likely to purchase from a women business owner. So there's a lot of power in there. And to that end, Visa has focused in a couple of different areas to really advance women's economic empowerment. I'd say first is on the right-hand side of the slide, an initiative here in the United States. It started in the U.S. Called She's Next, empowered by Visa. We rolled this program out last January at the Super Bowl in Atlanta, and it is now a series that has gone across the U.S. Into Canada, and we are now expanding into Africa. And really the purpose of the program is how can we support women small business owners, help them in their commitment to their own success, and provide access to tools, resources, insights, and networking opportunities. So if you can go to the next slide, please. So I just wanted to comment that, and I won't spend a lot of time. I know there's a lot of information on this slide, but I just wanted to comment that one of the things that we find is whether you're a small business owner in the U.S. or you're a small business owner in Mumbai or elsewhere. Small business owners have big aspirations, and there are many of these universal challenges that people face. They're not, necessarily, there are, individual challenges in certain countries, but they kind of fall into the same sorts of buckets. One, small business owners open their business, they're proud of their businesses, and they see that business as an enabler to a better life. They have big aspirations for their families, for their future, for financial security, and they want a balanced life between work and time with family. There's also, as they get into, and you all on the phone who are listening, into your businesses, you know that there's a lot of challenges in there. Lots of competition, new kinds of competition, pricing pressure, staffing can be hard to come by at times. The skills that I talked about, really feeling like you know how to run your business best. And then there's just complex environments with taxation and how you run your business and so forth. So just to note that you're not alone, and there are a number of efforts, I think, around the world and here in the U.S. really trying to focus on how to help small businesses address those kinds of challenges. We go to the next slide. So we've kind of bubbled them up, and again, I won't take a lot of time here because I think we've talked a bit on it. One of the key challenges that, if we start at the left-hand side of the slide, really is access to capital. Often when people start their business, they really borrow from friends and family or fund or self-fund. But after that, where do you go, right? So where do you get access to the kind of growth capital you need for your business? We talked a little bit about rising competition. Changing consumer preferences is also one of those things that's important to stay ahead of. Excuse me, we talked about the access to skills and tools and the knowledge. And this was one of the things I noted that Dara talked about at the beginning, and is just the ability to kind of manage all of your finances together. I think actually it was Nicole talking to the savings rate. So how can you, as a small business owner, invest not only your passion, your time, your funding into your business, but how do you ensure that you have sufficient savings and insurance to kind of backstop you in those in sort of difficult times? And then finally, just lack of time and the staff to be able to support you to grow your business. So, I mean, again, those are kind of global efforts or global insights. What I would say is on the next slide is, so what are the different ways in which Visa is really making a difference or focusing our energy, particularly on women-focused businesses? And we'll talk about a couple of examples right here and continue through the deck. One is our Visa Foundation. In 2017, we founded the foundation really with the notion that the primary focus of our efforts there would be on women's economic empowerment. And really, as we've talked, the gaps in access to skills, networks, and financial services is something that really needs extra attention for women business owners. So on the left-hand side, the slide will talk a little bit about our Women's World Banking Grant. We did a $20 million grant to really focus on advancing women's entrepreneurship. And there's big aspirations that are tied to that grant, as you can see some of the key impact metrics that will be coming out as a result of that. So the notion that 10 million more women will have access to financial services, and really driving women's entrepreneurship to be actively engaged and improve their livelihoods and their financial outcomes. A new effort on the right-hand side is a grant that we are doing between the Foundation, USAID, and the Aspen Institute of Development Entrepreneurs, and really to get after the issue of why women are not getting the same kinds of access to capital. We see this in Silicon Valley. We see it in a number of places. Women may have similar business plans than a business that's owned by a man, but often they do not get the access to the same kind of credit. And we think that our hypothesis here, one of the things we're working on with this grant here, is to really address the decision makers, the leadership in organizations that are making financial decisions, that are making lending decisions. And really focus on not only on promoting diversity in these kinds of organizations, but really how do we actively put women in power of decision making in these kinds of investment positions. If we look at it globally, less than 2% of bank CEOs are women. So this is really focusing on how do we get women in positions of power where they're helping to make lending decisions. If we go to the next slide. Here, just like to spend a couple of slides talking about some tools that we have available here in the U.S. Practical Business Skills is a set of small business online curriculum and programming really built for business owners and their employees to focus on that skills gap we talked about. Visa has more than 25 years of experience in providing online training skills. If you go to practicalmoneyskills.com, there's a number of free resources there for yourself, for your kids. I've used it with my children and some of their classmates. So a number of resources that we have available, but we really, again, have identified this gap in what are the kinds of needs or skills or information, depending on where you are in your business life cycle, from getting started, what does that take, to managing your business, and then building and growing. We have these tools available in English and Spanish and have started this programming here in the U.S. and will be expanding that around the globe. If we go to the next slide, we'll just talk a little bit about some of these content areas. And so if you go to practicalbusinessskills.com, you can go around the site, and depending on where you are and what your questions are, we have different areas for you. As I mentioned, we have the Getting Started. So this is, even if you haven't yet started your business and you're looking to put together a business plan, we've got some tools and basics there, a lot of interactive content, some videos, even a business plan template. For an existing business owner, in the Manage Your Business section, we've got a number of tools about like record keeping and financial management, budgeting, and really understanding financial statements, which are critical to ongoing management of your business. And then finally, in the last section on the far right is building and growing your business. And in here, as you can see at the bottom of the slide, there's a number of tools, again, tools that you can download and use, like a cash flow analysis, break-even analysis, and P&L statements. So just a number of tools that are available broadly. The tools are available here at practicalmoneyskills.com and also in conjunction with our She's Next Empowered by Visa resources as well. On the next slide, just to get a sense, really the small business owners that we have in mind really kind of span the globe. The Practical Business Skills small business owner really is an individual entrepreneur, generally a business owner with less than 10 employees. Could be someone in the retail or service industry, and they're kind of in the startup and development phase of their business. And we just gave a couple of profiles of people so that you can see, again, these are kind of common questions, and women business owners around the world have the same kinds of interest in starting businesses and growing businesses, and some of the same kinds of challenges. And then on the last slide, just to quickly change it up before we get to the end, and we'll have a minute or two for questions. One of the things that we wanted to talk about is a capability that we have called Back to Business. As we think about climate change and its impact on, or potential impact on, small business owners, some of the, and really what brought this idea to the forefront for us was in 2018. Remember the number of pretty severe hurricanes and weather events that hit the southeast of the U.S. And some of the challenges small business owners were saying is, well, my business didn't get, impacted, but nobody knows I'm here. And so really the idea was, how do we help small businesses really kind of, no pun intended, kind of weather the storm when they are impacted by these kinds of natural disasters. I know you've got a lot on your plate as a small business owner, but this kind of disaster preparedness is really an important part of your business plan and your ongoing thinking. From some recent survey work, what we know is about 42% of small business owners don't have a disaster recovery plan. And generally, when there is a natural disaster that impacts a small business, it can take up to, on average, about $850,000 to recover from these kinds of natural disasters. So there's just just wanted to highlight that it's a critically important part of running your business. And we are committed to small businesses that are affected by federal disaster areas. So as I mentioned, this was started in 2018 in the United States. And how that works is it really allows us to use the power of our network to be able to identify what small businesses are open in a natural disaster area in the United States. And then we, through a login or an opt-in participation program, we allow, we have an outreach program that will allow consumers to understand which businesses in their communities are open and allow them to support those small business owners. So we think, again, disaster recovery is critically important. This happens to be a capability we've rolled out in the U.S. And then if we think to, some of the, what we've been seeing in the global news about Australia and some of the major fires there, in February this year, we have extended this capability to Australia with the idea of helping small businesses in their recovery efforts after these record-breaking brush fires. So again, I know that we are short on time. I just wanted to thank you for the time today, give you a little bit of background and kind of forward-looking on how Visa is engaged in supporting small businesses, why we think women's economic empowerment is so critically important. And Nicole, maybe I'll hand it back to you. Thank you.
Thank you so much, Stacey. Such great information. Love knowing that Visa is on the forefront. Love hearing about the She's Next and the work that the foundation is doing. And I'm really encouraged that key actors such as yourself are at the forefront of imparting education, resources, and the tools in a digital, mobile, and easily accessible format. Now, I know we are very short on time, as we've said, but I would like to potentially open the floor for participants to ask a couple of questions. So with that, I would like to turn it over to our team, but also let's just thank Dara and Stacey for all that great information. Timren, are you there?
I am. Thank you so much. Again, I just want to echo that. Dara and Stacey, we really appreciate you being here. We just have a quick question. I think this is mostly for Dara. How can home-based businesses with very low budget separate their business and personal credit?
Okay. Well, I think that one of the, it's very hard, right? It's very hard. I think especially when you're just starting out because, you're borrowing from sometimes, your home savings to pay your business expenses and vice versa. But I think that one of the ways that you can try to, not mingle the money as much is to have separate accounts at a bare minimum, so separate bank accounts, so you're not commingling the money. In terms of building your credit, though, when you can start to build a business credit file, a Dun & Bradstreet, if the creditors will report to Dun & Bradstreet. So normally you have to ask them. So let's say you for instance, get a line of credit from Bank of America, and they're going to help you buy some more inventory. You need to ask them, my payments each month, who are they being reported to? Is it being reported on my behalf, my individual behalf? Because then it's just going to your personal credit history. If you want to ask them if they can start to report to your business name, you need to have that conversation. And they might say yes, they might say no. It depends on what was used to underwrite that loan in the first place. But it's a good question to always ask is who are you reporting to, which bureaus, when I make my payments monthly.
Thank you so much. Thank you both, Dara and Stacy, again. And Nicole, you were great. This was fantastic. I think we could be on here another hour answering all of your questions. We will definitely follow up with all of the questions that we received today. So if you have any additional questions, please feel free to email us at info@nwbc.gov. You can also find all of the presentations and slides on our website, nwbc.gov, under the tab that says Webinar Wednesdays. Also, please make sure to keep up with us on LinkedIn, Twitter, and Facebook. All of that information is also on the slides. We look forward to the next webinar. We'll keep you updated and posted on those dates and topics. And thank you all so much for joining us today. Have a great day.
Thank you.